Good morning. We will pay attention to asset disposal today when the diminishing balance method is used. The information is given to me on the first day of the current financial year, 1 January 2015. So this year will be from the 1st of January up to the 31st of December 2015. And we will do all the calculations for this specific period. Included in these machines are more than one machine, and we've already written off depreciation in previous years. One of the machines with the original cost price of 30,000 was damaged in a fire on the 31st of March. So that is 3 months after the beginning of the current financial year. At the time of the damage, the machine was 18 months old. The machine supplier was willing to accept the damaged machine as a deposit of 5,000, so that is the trade-in value, on a new machine that was purchased for 35,000. Depreciation is provided at 20% per annum according to the diminishing balance method. If we look at the machine that was sold, it was 18 months old on the 31st of March, so we must work back 18 months. That means this machine was purchased on the 30th of September 2013. The end of the financial year is every year the 31st of December. We didn't write off depreciation for September because it was on the last day of the month. So in that first year, we only wrote off depreciation for October, November, December. That is 3 months, and that gave us 1,500. For the 2014 year, because it's diminishing balance, we take the 30,000 cost price minus the depreciation for the previous year, and on the 28,500, we will calculate 20% for the full year, and that will give us 5,700. In the current year, we started using this asset on the 1st of January. It was damaged in the fire on the 31st of March. Because it's diminishing balance, it's 30,000 minus the 1,500 depreciation in the first year and minus the 5,700 in the second year. In 2015, we only used it for 3 months, so we will calculate depreciation for 3 months on the reduced amount, and that will give us 1,140. Step 1 in asset disposal is to determine what is the depreciation for the current year. Step 3 is to determine what is the total accumulated depreciation from the purchase date until the asset was sold. So that means the total amount written off was 8,340. We had 140,000 machinery at the beginning of the year, and we sold a cost price of 30, so what we've got left over at the end of the year is 110,000. The accumulated depreciation total at the beginning of the year was 26,800. That is depreciation on all the machinery written off in previous year. We will add the depreciation for the current year, 1140, and we will subtract the total accumulated depreciation on the assets sold. And that will give us a balancing figure in our accumulated depreciation account of 19,600. And we will calculate 20% on the reduced amount, and that means that the depreciation on machines that we purchased in previous years will be 18,080. The new machine was purchased on the 1st of July 2015, and we used it until the 31st of December 2015. The cost price was 35,000, and we calculated depreciation at 20% for the 6 months that we use this asset, and that will give us 3,500. So that means the total depreciation that will be written off on existing machines that's still in the use of the business at the end of the year will be 21,580. Step 1 in asset disposal is to calculate depreciation for the current year. When we complete the journal entries for the asset disposal, step 1 will be to calculate the depreciation. So I will debit depreciation with 1,140 to increase the expense, and I will credit accumulated depreciation to increase my negative asset with the depreciation on the asset that was damaged in the fire for the 3 months that we used it in the current year. The second step is to transfer my asset to the asset disposal account. Machinery has a debit balance, so if I want to take it out of the machinery account, I must credit the machinery account and complete my double entry on the debit side of asset disposal. The third step is to transfer the total accumulated depreciation to asset disposal. Accumulated depreciation has a credit balance, so if I want to remove it out of my accumulated depreciation, I will debit the account and credit asset disposal. We traded this in on a new asset, so I will owe less money to my creditors because I buy the new asset on credit. So creditors' liability will decrease on the debit side and asset disposal will be credited. I have to determine in step 5 whether I made a profit or a loss. Asset disposal on the debit side is 30,000. On the credit side, 8,340 and 5,000. So the debit side is bigger than the credit side, so I will subtract it from each other to determine what is the loss that I made, so that the credit side of the asset disposal will correspond with the 30,000 Rand on the debit side. Loss on sale of asset is an expense. Expenses always increase on the debit side. We bought new machinery for 35,000 Rand, so the machinery asset was increased and creditors' control is credited because we owe this money. The total depreciation calculated at the end of the year on all the assets that we have in our possession, that is assets purchased in the previous year plus the asset that was purchased in the current year, will be debited to the depreciation account and will be credited to the accumulated depreciation account. Machinery is an asset. Assets have debit balances and increase on the debit side. So my balance at the beginning of the year was 140,000. Accumulated depreciation is my negative asset. So machinery and accumulated depreciation actually forms a unit. The machinery is my debit side of the asset, and accumulated depreciation is the credit side of my asset account. And I will start this balance on the credit side to indicate that there is a negative asset of 26,800. The first step in asset disposal is to calculate depreciation. Depreciation is an expense. Expenses increase on the debit side. So I will debit depreciation and I will credit accumulated depreciation. Step 2, I must take the machine out of the machinery account because I don't have that machine anymore, and I will transfer it to the asset disposal account on the debit side. Step 3, I must determine what is the total accumulated depreciation on the disposed asset from the purchase date until the date that this asset was damaged in the fire. I want to take it out of accumulated depreciation, so I will debit the account and I will credit my asset disposal account. Then I have to record the money that we receive. So they've given us a 5,000 Rand trade-in that will reduce the money that we owe to the creditors, and the balancing figure in this asset disposal account will give us the loss that we made on the disposal of this asset. At the end of the year, we have to calculate depreciation on the assets that we still have in our possession at the end of the year. So that's the assets that we purchased in previous years, plus the new asset that we bought in the current year, and the total depreciation at the end of the year will then be 21,580. We will determine the closing balance, so we will balance our machinery account to determine what is the balance that will be carried down to the next financial year. And in the accumulated depreciation account, we will also balance the account because it is a B account. The depreciation account will be closed off at the end of the year to the profit and loss account. Because it's a nominal account and it's an expense, we will indicate that the profits will decrease with 22,720. The loss on sale of asset is also expense, so we also have to close it off at the end of the financial year and transfer this loss to the profit and loss account and indicate that the profit was reduced with 16,660. For the new machine that we purchased, we will credit the machinery account with the cost price of the new machine, and we will credit our machinery account with the amount that the value of the machinery increased. The machinery increased with 35,000, so we increased machinery on the debit side with 35,000, and we will credit our creditors control with 35,000. That means we credit the creditors control with the total value of the machine that we purchased, and we subtract the 5,000 trade-in value to indicate that we only owe 30,000 to the creditors. When we complete this note, we have to start with the carrying amount at the beginning of the year. To determine this amount, we must look at our opening balance in our asset account and the opening balance in our accumulated depreciation account. So the machinery had an opening balance of 140. The accumulated depreciation had an opening balance of 26,800. I will indicate the cost price as 140,000. The opening balance of accumulated depreciation must be in brackets because I have to subtract it from the 140,000 to determine that the carrying amount at the beginning of the year was 113,200. We wrote of depreciation of 1,140 on the asset that was sold, and we wrote of depreciation of 21,580 at the end of the year. All the amounts in my machinery and accumulated depreciation account must be transferred to the note. So we will transfer both these figures as depreciation to the note. And we will indicate that the depreciation will reduce the value of my asset with 22,720. I also have to reduce my asset with the carrying amount of the asset that was sold. So I will take my machinery, 30,000 into account, the cost price, less the accumulated depreciation on the machinery that was disposed of, and that will give me my carrying amount. So in the note, I will show that I take the cost price of 30,000 minus the accumulated depreciation of 8,340, and therefore the value of our assets decreased with 21,660. We bought a new machine for 35,000. That 35,000 will increase the value of my assets. So for additions, I will show that we increase the value with 35. If I take the 35 minus the 22,720 minus the 21,660, it means that it gives me a negative figure of 9,380. So there was an outflow of money during the year. The closing balance for machinery is 145,000. The closing balance for accumulated depreciation is 41,180. If you look at these two accounts, you will see that I've put a sign next to each figure. So it means that I've used every single figure in these two accounts in the note. The cost price is 145 at the end of the year. The balance in the accumulated depreciation account at the end of the year is 41,180. And if I subtract that, I determine my carrying amount at the end of the year. I can also check myself taking the opening carrying amount less the total movements, and that should give me the same answer. What did we learn? When an asset is sold, you must complete 5 transactions on the date of the disposal. First of all, you will calculate depreciation for the current year, debit depreciation, credit accumulated depreciation. Then you will transfer the cost price to asset disposal to remove the cost price out of your asset account on the credit side, because it's not in your possession anymore, so assets must decrease and asset disposal will be debited. Accumulated depreciation has a credit balance, so we will transfer the accumulated depreciation, debiting the accumulated depreciation account, crediting asset disposal. Then we will record the sales transaction, and we will debit the creditors because there was a trade in, and we will credit asset disposal. The difference between the debit and credit side in the asset disposal account will indicate whether we made a profit or a loss. At the end of the year, we have to calculate depreciation on all the machinery that's still in the possession of the business. On machinery that was purchased in previous years, you will write off depreciation for 12 months. On machinery purchased during the current year, you will write off depreciation for the number of months that you used the asset.